Hello everyone, welcome back to Cradexa. Today we are going to talk about a very important concept in finance, capital market. What is it? How does it work? And why should you care? Don't worry if you have never studied commerce or finance before. In this video, I'll explain everything in simple everyday language with easy examples. So let's get started. Let's say you own a company that's been running successfully for a few years. Now you want to expand, maybe build a new factory or launch a new product line. You need 100 crores. That's not a small amount. Instead of taking a loan from the bank, you decide to raise this money from the public. You do this by offering shares or bonds to investors. This entire process of raising long-term funds from investors is done through capital market. So, in simple terms, capital market is a place where companies and government raise long-term money from investors. It connects those who have money with those who need money for growth. Market is mainly divided into two parts. Primary market. This is where new securities are issued for the first time. Imagine a company going public for the first time. It launches an IPO, that is initial public offering. Investor buy shares directly from the company. For example, when Zomato launches its IPO in 2021, people could buy shares directly from the company through the primary market. This is how companies raise fresh capital. Secondary market. This is where existing shares and securities are bought and sold among investors. Let's say you bought shares of Zomato during the IPO. After a few months, you want to sell them. You don't sell them back to Zomato. You sell them to another investor. For example, you trade the shares on stock exchanges like NSE or BSE. That's the secondary market where trading happens every day. So, let's recap what we have understood till now. The primary market is where shares are issued for the first time, and the secondary market is where those shares are traded later. Now, let's understand what the capital market actually does. What is its role in our economy and for investors like you and me? Mobilizes saving. Instead of keeping money idle in your saving account, capital market allows people to invest in shares and bonds and help companies use that money to grow. Helps in capital formation. Small investments from lakhs of people add up to a huge amount, which companies use to expand. This leads to economic development. Provides liquidity. Want to sell your shares or bonds? You can do it easily on a stock exchange. That's called liquidity, converting asset to cash quickly. Price discovery. Capital market helps in deciding the fair price of a company's share based on demand and supply. Offers investment opportunities. Capital market gives you multiple options like shares, bonds, mutual funds, ETFs based on your risk and return preferences. Now, why is the capital market so important for a country? Economic growth. It provides funds needed for the infrastructure, factories, technologies, and innovation. Boosts entrepreneurship. Successful companies can raise money to expand and grow further. Funds for the government. Government issues bonds in capital market to raise funds for public projects like roads, hospitals, railways, etc. In India, the capital market is regulated by SEBI, that is Securities and Exchange Board of India. SEBI ensures transparency, fair trading practices, investors protection, prevention of frauds, and insider trading. A common misconception is that any new company can go to the capital market. That's not true. Only well-established companies that meet specific conditions like minimum profitability, proper documentation, and corporate governance can list on the capital market through an IPO. Brand new startups usually raise early stage funding from angel investors, venture capitalists, private equity funds. That's called private market, not capital market. Let's take a quick recap. Capital market is equal to long-term fundraising platform. It has two parts, primary market and secondary market. It supports saving, investment, and economic growth. Regulated by SEBI in India, only eligible stable companies can enter. This was just the first part of our capital market series. In the upcoming videos, we'll be explaining all the major participants in the capital market, like retail investors, institutional investors, brokers, mutual funds, and more. The different instruments you can invest in, like equity shares, bonds, debentures, and derivatives. Will explain everything in simple manner so you understand, not just memorize. So don't forget to like, subscribe, and hit the bell icon because your financial literacy journey has just begun.